Hey guys, welcome to my channel Success Sequence. In today's video, I am going to analyze a typical trader situation, how they feel confused and how they end up doing the wrong things without considering the indicators that are there that can help and that can really save them from taking the optimum profit or booking the right amount of loss if they would have considered the particular indicator. So let us consider my own analysis and analyze how a particular trader would have traded a particular resistance and how they would have considered a support, whether that support is going to prevail or not. So if you have got training under me on a personal training wherein I have shown you and explained to you how the 5 days highs exponential moving average could be used to trade at a support and a resistance and how to confirm the resistance. So as you can see here, this is red line is 5 days exponential moving average. Prices gone up, but it at a higher level it again uh, felt a resistance and came down below its 5 days exponential moving average. So remember the personal training session that I had with most of my subscribers. uh, Resistance at a 5 days exponential moving average, what you should do, you should wait and let us the next candle open at a lower level, and what we should look is we should look that that candle should close, the close of that candle should be the below the red line, which is 5 days exponential moving average. So as you can see, the candle did generated close below the red line, so that was our confirmation that now this this resistance is confirmed and it should hold. So still, as I suggested many times to my subscriber, if you did not get a clear body and you feel that no, still need to wait, what you can do is you can still wait, and what you should expect is the second level of resistance should prevail. I mean, if you see a bodies of a candle going up and there is a particular level, that is the first level of resistance and second level of resistance. So this level of resistance should prevail. I mean, at this level prices should reject the prices at higher level should register a rejection. It is not like that it happens exactly as happened in this candle, but what we expect is this kind of this level, I mean this high should not got breached by that particular price movement on the third day. So here you can see the market did close above that, and you can see there's a very typical case and very in this kind of cases you really got challenged as to whether to go short or not. So again you can see the resistance did prevail. However, it did test you because it got slightly up. However, it immediately came down and finally closed below the 8 days exponential 5 days exponential moving average, 5 days high of exponential moving average. So we were pretty sure that now this level of resistance is there. So basically why we are doing this because we need a first confirmed resistance that market should not break, and our early warning signal would be like a second level of resistance. So at this level, I mean these are the level will act as our strong resistance. If market breaks this particular level or closes breaks and closes above this level, will definitely covering our shorts that we have generated at this level. So 9700 strike price, you can either short and options, you can write call or you can go short at whatever you like, you can do. Basically we will remain short in this particular level. So now what we do is we need to wait. We what now our early warning signal would be the resistance at this level, the spot value 9686 or 9680 should not get broken, or if at all it gets broken, we need to decide whether we will be waiting for the market to close below this level or we will be covering our position. So that was the kind of decision making comes into the picture if this particular level gets broken. So we shorted here. This is our stop loss, and the red line will be our early warning signal. So we waited. Here you can see the market did try to break above the 5 days exponential high, but it could not. Finally it went down, and when you try and trade 5 days exponential moving average, especially high, what you should expect is your target of 30 days exponential moving average. When you get the 13 days exponential moving average target, I mean price trades near that level, you should definitely booking your profit. If you are trading with the two lots, one lot should definitely go, no doubt, no questions asked, you should definitely book your profit. So here you should have definitely booked your profit, and if you are a trader with a one lot or something like that, you can definitely book your profit and out of the game. Now what to do if you are holding a second lot? What you should do is you should not see rejection of a prices at a lower level till the time you want the prices to trade below that level. What I mean is, if you are holding a second lot, what you need is the 13 days exponential moving average needs to get broken so that we can hold on to our uh, second lot. Otherwise what would happen is market would start getting rejected at this level and it will came up again, and finally you will end up either incurring losses, or you would not be able to take the profit at a maximum level. So what you should do is you should wait. So we waited here, we saw that market did go pretty much high, but the 8 days exponential 5 days exponential high was our target. It did not get broken, so we waited again. Finally market came down because it was trading below its 5 days exponential high, broke. First it penetrated, then came up again. So there was kind of early warning signals for us if you want to get out of the trade. But why we stayed there, I'll explain to you. Just because the typical trader how trades, I'm trying to explain you to that. So here, so most of the trader would have got out of their position or would have booked their profit, but we did not do that. We hold on to our shorts. And why, I'll explain to you a bit. Because what you can see is rejection of a prices at a lower level at a critical support that I have been telling you from a quite a time now. So 13 days exponential moving average, rejection of our prices at a lower level and a support, definitely you should go out of your trade. But when you trade continuously and you analyze various other indicators, you come to know that no, there is not the end at here, and there are other things that you can look, and you can hold on to the market. And this gives you a kind of edge rather than the other market who are only trading the psychology of the market based on the candlestick and moving average. So here we also waited. Finally market did try to came up, but did not close the day's high, earlier day's high, and finally it went below is what we can say is 30 days exponential moving away. Now it is trading below that. So where we booked our profit is here at this level. We finally booked our profit, and then we waited. Finally came market came up, tried to breach is what you can say is 5 days exponential moving average. But still, I if you guys were trading with me, I suggested that you should go short here. Because why we should go short here, I'll tell you in a bit. But most of the other traders would have seen that now the 5 days exponential high has got broken, so market should break above this level. However, you can see that the candlestick resistance is also working and it is prevailing. So we did go short here with a stop loss of this. I mean 9686 was again a stop loss, and we went short here again. Finally prices did test this 5 days exponential high, finally traded below it. We got our 13 days target. As I said, 5 days exponential high, and the second target would be 13 days exponential moving average. However, we did not close our position. Finally market did rejected came at a high level, but still we did not book our profit here. Why, I'll tell you in a bit. Again, finally prices came down, and finally it fall, and we generated a good amount of profit. Now let me tell you why particular resistance was ignored. Even if the spot levels was getting broken, we did ignore that just because of one indicator that clearly suggests a picture at the like what is going on in the market and why you should hold your trade. Again, you can see we did where we covered our position was here at this red candle. We covered our position, and if you can see, finally market broke above, and that was a good time to break the highs. We actually rolled over our position to get into this trade. So now let us check why, and what was the rationale of doing that. So if you have watched my CCI's video, I would have clearly mentioned that what are the levels you should look for, what are the normalized level, and what are the levels that you should be worried and get worried about. So 89 plus and 89 minus are the level. Above plus 89 and you are going to see a good amount of up move, below minus 89 and you are going to see good amount of down move. But that is not it. We try and trade a market much before the other market participants who are using the conventional methods. So what we do is we add a moving average to CCI, and that gives a lot of advantage to us. How? Let me explain to you. So first, you can see that why we entered the position at here, because now the 8 days exponential moving average has acted as resistance. And look at here again, the CCI has generated a bearish crossover. I mean the white line has now gone below the red line, so that is a bearish crossover. So what will our strategy would be? Till the time the white line stays below the red line, we will hold our shorts and will not cover our shorts. So just see that here market got down again, and from here what the minimum target you should expect is 0. I mean CCI should come at a 0 line. That would be the conservative traders target, and that is what we are expecting for. So why we covered our position at here, as I suggested in my last video, because we did see some sort of rejection. So price RSI, CCI fell down, but it hesitated here, so a stable line got generated, so we did not took a risk and we covered our position here. However, you can see that that was a good decision because market got quite up again. However, why we got short here again is, look at the CCI. It did not got it was not able to break this red line, and above that, that was a resistance of candlestick, which is 9680. Prices were not actually near to that, so that is the reason we got short here. Again, we would hold our short till the time the white line stays below the red line, and again you can see the prices did break. Here you can see, okay, again prices did tested our what you can say is our spot basis stop loss, but we did not cover a position because look at the red line, the white line is still trading below this level. Again you can see that is a negative divergence kind of thing happening at the top here. Here is the top, and the second top form, though the prices are at high level, the second top was below to that. That was kind of negative divergence that was clearly suggesting that the prices should go down. So finally we waited, first target got achieved here. It broke below the zero line and bam, right onto the 89 level target we got. So at minus 89 we got our prices, and here you can see the minus 89 got broken and we did see a good amount of break below that level. So finally the prices came up here. So at minus 89, break below the minus 89, and whatever profit it gives you, you should definitely take the profit and get out of the trade. So we did that when we got out of the trade, but some trader did not got out of the trade because they felt that now the prices are trading below is 21 days exponential moving average. Again here you can see the rejection of higher prices, so prices should go down, but that was not happen, and you can see prices instead went up quite aggressively. The reason I tell you here, again prices came at this level. So here you can see again the resistance level that we are earlier trading, the prices come at this level, and you can see why we covered our position, because now the white line is trading above the red line, so that is suggesting that market should go up, and at this level here you can see it is trading at a plus above plus 89 line. So that is something that is suggesting that we can expect some good bullish move to come, and that is the only reason we covered our position here. So just take out the CCI from your analysis and you would see that you have a no clue how to and when to book your profit, and when to consider that this kind of spot will hold or will not hold. So that is the power of CCI, and if you use it correctly you can definitely make a good amount of money, especially if you are shorting a call option or put option. It definitely gives you advantage because the time it takes to reach again at that high level will generate a time decay, and till that time you will definitely you will be definitely making a good profit due to the time decay. And even after that prices do comes at that level, it will not make much difference, because the pricing formula suggests that the higher the time passes by, the time decay deceleration, the decay of time increases very rapidly. So that is the only reason we are making money. So this kind of math you should also know, so that you can get a good amount of advantage while trading. So this was the kind of analysis or the personal training I am giving to some of my subscribers who are availing my personal coaching. So that kind of analysis definitely gives you an edge whenever you try and trade the market like this way. However, I have already mentioned the CCI and how to use it in my videos that are free for YouTube subscribers. But the kind of personal training I give you the in-depth analysis on how you should hold on to trades, the psychology, that what the market participants are working on, and why you should not solely rely on candlestick and also use other indicators. So we do not only use CCI, we use RSI, uh, we use RSI, MACD, and various other indicators. We'll also consider volatility as to whether we should buy options or we should write options. So option activity, rain data, also all these things we can see and we'll try and trade accordingly. So that much amount of analysis no other players are supposed to be doing, and that is the only reason we are getting the edge that we are getting. So I hope guys you like this video. Please hit the like button if you really enjoyed watching this video. Those who are trading in the market must have realized how important it is and they must have faced the same kind of dilemma while trading in the market, so they would really appreciate the kind of help this CCI indicators would do. So they would definitely like the video. Otherwise, as always, subscribe to my channel because I am posting this kind of ideas on a regular basis. If you have any comments or doubts or feedback, you can always mention it in the comment section of the video. So guys, that's it for the today's video. Thank you for watching.